This is Tom Aspray with the Viper Report. FOMC meeting yesterday caused a big surge in the stock market, confirming the positive technical underpinnings we've been talking about for the last 6 weeks or so. And just want to touch base with everybody before the market wrap video. You know, it's never too late to start investing. I know many of you are probably shell-shocked from last year. When I first transitioned from a biochemist to a financial analyst, it was in 82, and I was talking to clients in 90, 92. Many of those people did not invest in the stock market because of the 73, 74 bear market. Ran into the same thing in 2009 when the stock market had bottomed from a technical standpoint. A lot of people were still recovering from the 2000 dot-com. You don't want to be in cash, for the next 2 or 3 years and miss out on some opportunities. But of course, my methods really concentrate on the risk, so it's not a time to, chase prices or, buy Meta today is up 20%. But if you'd like to learn more about the markets, I hope you'll, contact us and keep watching the videos and ask questions. That's the most important thing you can do. If you want to look at past article in Forbes, just search Forbes Tom Aspray. You'll get a whole listing of all the articles I've written lately. And you'll see that for the last 6 weeks or more, I've been saying that I thought the worst of the decline was over since October, and that stocks were going to be moving higher, which is what's happened. So it'll give you an insight to how I look at the markets going into this week, FOMC meeting, etc., big earnings we have after the close today, and a jobs report tomorrow. Those who are bearish in the market expect the earnings to be poor. Well, Meta, we now know, did not fit that bill, and certainly the FOMC meeting was more constructive for a soft landing in the economy, not the inevitable recession that many are scaring investors with. If you're interested in learning more about technical analysis, there's a link in the video to a special offer. It's a $199 offer. I'll spend 90 minutes teaching you about the markets, answering your questions. And of course, if you would like to subscribe and get specific buy and sell advice, go to the Viper ETF report or the Viper Hot Stocks report. They can both be found at viperreport.com. Hope you enjoy the weekend video. Good morning. This is Tom Aspray with the Viper Report. It's Sunday, January 29th. This is the wrap video for the week ending the 27th, and it was another wild week. Lots of movement. Most of it was generally positive. Intel got crushed again. Remember when it was about $60, now it's at 29. Microsoft had worse than expected earnings, but actually closed higher for the week. Tesla got a big boost and was up like 30% for the week. Let's look at some charts. More strong action from the advanced decline line, over 2-to-1 positive on the NYSE All. You can see we continue to climb higher here. The weekly AD line has broken this major resistance a couple weeks ago and has improved further. So that's a good sign. Next resistance, of course, is this peak, which is not that far above current levels. And support, of course, is in the 15,288 area in the 20-week. The 61.8% resistance of the decline from this peak to that low was overcome last week. The daily chart shows you a little more clearly what we were seeing earlier in the month when we added to long positions, this little zigzag in here. And, sort of as I teach in the advanced decline line course, it's sort of a staged process. If we don't have any divergences, which we didn't in December, you get a move above the moving average, then you get a break of the first downtrend, then a second downtrend. Pretty much all we got to do now is move above this high, and that'll be 3 positive signals for the AD line. Daily chart, allows for a book. We had this nice pullback a week ago. Great buying opportunity. We could see another one this week. Lots of economic data, culminating with the jobs report on Friday, plus big earnings from tech, Google, Alphabet, Apple, and Meta all report this week. So that should be plenty of fireworks. S&P chart also improved, a convincing close above this downtrend. This high was around 410.37, so we're not far below that. Looking for a move up to this 424 to 431 area, probably before the end of the first quarter. And you can see the AD line is showing a little more bullish pattern for the S&P. It had been lagging the NYSE, but now appears to be catching up. The close on Friday was a bit off the best levels, so you can see, 398, 395, 30 or so as the next levels of support in the downside. The QQQs have also broken its downtrend. Still just below this peak was at 296.88, so basically we hit it last week with a high of 298.26, so we're right up there. And the next month pivot looks to be around 285.76 on a preliminary basis, so that's where we'll be looking for support next week. AD line has broken its downtrend, still below this peak and still lagging the others. The weekly relative performance, has improved. It moved back above its moving average. I'd like to see the moving average turn higher, but that often takes a few weeks. So turning a little more friendly towards the QQQs, particularly the way Microsoft acted after its earnings. Of course, we're both watching rates this week with the FOMC meets on Tuesday. Everyone's expecting a 25% rate hike. If they don't hike at all, it'll be probably quite explosive on the upside. If they raise 50 basis, it'll probably be a negative. Don't really think from looking at the data they need to raise rates, but they will since it's widely expected and they don't want investors to get overconfident. Early signs of a bottom here. We have a divergence in the histogram. This is about ready to flip back to positive. So the downtrend here at 3.764 on a yield basis for the 10-year note. So you move above that. I'll be watching this for signs, of a turn in yields. I don't think that necessarily has to be I don't think a rise in yields necessarily has to be a negative for stocks, at least early on. Short-term rates do not look like they're necessarily going to move higher. You can see we're just bumping into the 20-period EMA here. A pattern of lower highs, lower lows. MACDs are near positive. I guess the histogram just did turn positive on Friday. The spread is the spread between the yield and the 20-period EMA is still negative. You can see it gave very nice divergences here at the highs in November that we discussed in the video at that time. On the sentiment front, things are getting a little more interesting. I featured this chart in my Forbes article this weekend. Bullish percentage, you can see it's locked in a range, but I think we're going to see a move above this resistance at line A in the next couple of weeks. And you can see that's really contained the sentiment all year, all last year. So I think that might be significant. It often is. You can see way back in here, and that must have been the summer, early fall of 2020, post-COVID. We started to see a sharp move to the upside, early in a rally phase. So that may be a sign that finally the bullish camp is getting a little more popular. That may be a sign that the bullish camp is getting a little more popular. Also from the NAAIM, it finally closed above this resistance at line B. So this is the percent in equity from the active money managers. You can see, it peaked out ahead of prices here up in the above 100% level, in late 2021. So that would be a positive side. Some data suggests there's $4.8 trillion in money market funds, so that's some pretty good buying power on the sidelines still. And the S&P 580 line, shows that same bullish formation I showed you earlier. Some of the short-term indicators are suggesting, we are getting a little overbought. You can see the NYSE, the advanced minus decline oscillator, hit a peak here at plus 1400. It's making lower highs here. So if it gets back up to plus 1200, that's often kind of what we see before we get a pullback. I'm not looking for that kind of pullback. I'm more looking for just a drop back, maybe towards the 15,500 to 750 area for the NYSE composite. Number of new highs on the NYSE composite have been outpacing the new lows by a wide margin. You can see just 6 on Friday, 115 new highs. Still would like to see, a move above that 150 level soon to support the rally. We're kind of stalled in here, but that's a number I watch, and you should be watching that every day if you're an active trader. Looking at the number of stocks above their respective moving averages on the S&P 500. In green here, we have above the 20 EMA. So it's diverging a little bit here. So that's something to keep an eye on a short-term basis. The other patterns look pretty positive, clearly in an uptrend. The 200-day is about ready to move above that peak, but it's well below extreme levels. So some of the real short-term measures look a little toppier. This one I follow pretty closely. It's the number of QQQ stocks above their 10-period moving average. You can see we got up close to this, upper Stark band on Friday, and this is, looking a little toppy. That last little pullback, in the market, we got down to 30, so that's kind of the level to look for support. Short-term RSI also is at overbought levels and a bit extended. Here's a look at the our daily futures analysis. You can see last week we popped above the M1 level. This is the daily chart of the futures. We can see last week we did exceed the R1 resistance here in red. It was at 41.01. We got up to high as 41.10, I believe, and 41.09 and a quarter, and pulled back. So this coming week, there's some support obviously at 4100. The pivot is way down here at 4000, so quite a bit of room down there. Chart support, in that 4027 area. So far, the Wednesday buy signal worked out pretty well. Got long in here at 40.35 and change. Hit the first target and the second target on the upside here. So now we're using the stop, as I'll report later, at 40.56. That's above our entry point on the remaining position. In response to some of your questions, here are the positions for ETF traders. We're still in the gold miners and the GLD. Getting up there. Haven't seen a good opportunity, unfortunately, to add to positions. We took a quick profit on the GDX, which in hindsight was a lousy idea. Pretty much, widely spaced out. We also have a nice open profit in SMH, but it still looks pretty good. Despite Intel's horrible earnings and sharp drop, it didn't really hurt the SMH. Materials I really like. They look close to being an upside breakout, not far from it. Crude oil, a little disappointing action on Friday, but we're still giving the XOP a chance. Also in ITA, it gave us a great fake out. We bought it at 11.56 and 10.48, and it just plunged. I think Solomon Brothers downgraded 3 of the largest holdings. It just got smacked for 2 days on heavy volume, but since has rebounded. So we're using a tighter stop, on that position. It will be on Monday's report, and but so far it's regained all that loss, which is a good sign. Well, that's all I have for today. As always, send me your feedback at Tom@ViperReport. love to hear what you're thinking, what you like, what I didn't cover you would like me to cover, etc. Thanks for tuning in.